Welcome back to Business Week here on Arise News. I'm joined now by Efosa Aluyi, co-managing partner at Astran Global Investments, to review some of our top stories in more detail. Welcome.
Thanks for having me.
Great to have you. So we want to start with Ghana. Ghana's Chamber of Mines has said gold production is increasing. Great stuff. Ghana is the largest producer, right?
Yeah, in Africa.
In Africa. So, tell us about how this kind of positions it in terms of competitiveness as a gold mining jurisdiction.
Absolutely. So, like I said earlier, it's the largest producer in Africa. It's the 6th largest in the world. And that production has just continued to increase over the last couple of years. In 2023, it was about 4 million ounces. In 24, 4.8. This year is expected to be about 5.1. Now, what's really driving that is a lot of the artisanal mining, right? And that artisanal mining has grown quite significantly. Last year, it accounted for about 40% of total production. And that's quite a feat, because if you look almost over 20 years ago, it was just under 2% of production. So that has grown quite significantly. And what has happened with the government now is that a lot of policy initiatives that are essentially aimed at, streamlining and updating its mining code that would essentially lead to better transparency, whilst also incentivizing investors. Are the things that the government is basically doing right now. One of the things it's also done is to remove the withholding tax on small-scale trading, which has really impacted the artisanal miners. And if you look at the economic impact as well, these guys employ directly about 1 million people, indirectly about 4 million people, right? And what that has done for the Ghanaian economy is really huge. So for context, FX reserves, foreign reserves, for instance, has grown to about 9.3 billion at the end of last year. That's coming from a low of about $5.1 billion in 2023. And that was just right after the whole debt implosion situation in Ghana. Its currency has also appreciated 33% year to date. Which is really, really significant. So if you even look at government revenues, at the end of 2023, it was about $1.1 billion. End of last year was about 8.4. What has really helped, again, is the fact that we've seen a significant rise in gold prices, right? Over the last 1 year, gold is up about 46%, year to date, about 26%, so that has really helped Ghana quite a lot.
Fantastic. And, I talked a bit about Ghana in terms of their FX and some of the macroeconomic policies of Mahama's government. But going back to the small scale and artisanal mining, seeing as it accounts for such a huge share of their total production, I think the small scale miners are called Galamsey or something in Ghana. What about concerns around labor and environmental and social issues? Is that something that plays in terms of the mining sector?
Oh, absolutely. Because a lot of this mining is still largely alluvial, and it has very significant impact on the environment. If you even see the conditions within which these mines work, within which they operate, and how they operate, of course, there are very strong concerns, for labor issues, for issues that also touch on and have to do, with the environment. I think for me, the point of emphasis is the sort of growth that Ghana has sort of benefited from what it's doing with gold over the last, couple of years. And that is something that a country like Nigeria, for instance, obviously should be learning from. We also have got some gold, not anywhere near what Ghana has, but I think that, the Ministry of Mines can certainly do more. In terms of policy, particularly taking advantage of what's happening with gold in the international market. One of the key things that's really happening is that you're seeing a very strong pivot away, particularly by central banks, away from the US dollar, for instance, to gold as reserves. In 2019, central banks purchased around 650 tons. At the end of last year, that amount has almost doubled to over 1,000 tons. And that's going to continue to increase because from a geopolitical standpoint, particularly in the aftermath of the Russia-Ukraine situation, a lot of countries are looking to move away from the US dollars to kind of hedge their position, if you will, and reduce their dependence or susceptibility to the US and for sanctions and all of that. So that's a great thing to look at, and we think that it will continue to benefit the government of Ghana.
Fantastic. Good outlook there for Ghana's gold. Now to another commodity, oil. OPEC is releasing 411,000 barrels. It did say it was going to increase output, but is this a risky strategy? Or do you think this policy of releasing these barrels back into the market is sound? What's your thought on that?
So at this time, I think it's a risk that is worth taking.
Okay.
For OPEC, this is essentially a play at clawing back market share, if you will, from shale producers that I think have been the major disruptors to global oil supply in the last decade. So what OPEC has done over the last 5 years really is to kind of, sequester production really about 5 million barrels a day, which is essentially around 5% of global oil demand. They've done that to try to prop up prices, but in doing that, they've also given up market share. So in the sort of market situation that we are in, what they're basically looking to do is to try and claw back, that market share. The last time they tried to do that in terms of, taking market share, it didn't really work out well, right? Particularly because the shale producers, due to technological advancement, had found ways to really reduce their cost of production. And they really won that round. But going into this round, I think that it is a risk that is worth taking. Just on the back of, OPEC making these announcements, we've seen crude oil prices actually drop. And then if you look at the tone of the White House, really, which is, drill, baby, drill. So the expectation is that there's going to be more production coming in from the US. So OPEC needs to sort of act quick to try and protect its, market share. However, if you look at what is happening with prices, then we think that the shale producers, might not be on that kind of strong footing that they were over the last, 10 years. I mean, they require anywhere around $60 a barrel to maintain, profitable production. Now, we're seeing where the WTI is. We're seeing the things that are happening with that. So that's going to be a challenge for them. As a matter of fact, rig count in the US has hit its lowest since January. By the count that we had in May, it has hit its lowest. So there are these signs that, the shale producers are beginning to sort of falter. And this could prove to be, a right strategy for OPEC. It really remains to be seen. And this certainly has fiscal implications for OPEC countries. It just means that some countries have, better buffers to be able to withstand all of the fiscal pressure, while others would have to significantly borrow more. For instance, the estimation is that Russia, for instance, requires about $77 a barrel to balance its budget. Saudi Arabia requires about $90.
We know what Nigeria requires, about $75.
So $75 is the benchmark.
Is the benchmark.
And with that benchmark, we're still running the deficit budget. Now, to balance our budget, we're certainly going to be doing above $90 a barrel to get that going. So what that simply means is that, with these oil prices, we're certainly going to have to borrow more. I think the key thing for Nigeria is ramp up our production. Let's deal with all of the insecurity that
if we can't control price, let's control volumes.
Exactly. So let's get the volumes out there so we can get the best of it in this situation.
Of course, very interesting. Now, Eurozone inflation has dipped below 2% for the first time in months. Right? I think it was 1.7. Is this a sign that Europe is on course, the Eurozone is on course for a deflationary trend going forward? Or is this just a blip? What's your take?
I don't think it's a deflationary trend. I mean, that number is essentially around the ECB's target. Now, the target is 2%. If you look at sometime in the fall of last year, that inflation had also come down, and the thought was that it was going to continue on that trajectory, but we then saw it kind of go back up a little bit, and then it's beginning to come back down. If you look at the underbelly of it, and this is really driven by core inflation, right? Which dropped from about 4% to 3.2%, and that's the lowest that we've seen in about 3 years. We also saw services inflation also dip quite significantly. If you look at the individual countries, the major economies in the Eurozone, we're also seeing inflation come down there as well. In France, it was 0.7%. In Spain, it dropped from 2.2 to 1.9. In Germany, it's still stable around 2.1%. So I think that, price pressures are coming off, but I don't think that this tends towards a deflationary issue.
Sure. And in terms of African economies that have sort of euro-denominated debt, currency pressures, interest rate pressures, what could this mean for those economies?
So, I mean, these are largely Francophone countries that are tied to the euro, essentially. And that's why if you look at those countries, interest rates inflation is really low because they are essentially operating the monetary policy of France, and essentially by extension the monetary policy of the euro, the Eurozone. So that has really helped them in terms of their ability to borrow. If you look at, I think it was in 2023, Ivory Coast was able to raise a euro bond at very low single digits. And then Nigeria came months later, we're doing high single digits. It was just on the back of the inflationary pressures we're seeing in that country. That is a direct derivative of what they are doing in terms of their monetary policy hooked to the euro. So it really does bode well, for those countries.
Yeah. Musk. I'm sure you've been following all the On the surface, quite astonishing exchanges between the US president and Elon Musk, who's now left the government, obviously, after about 6 months. But this debate over US government debt, it's a very sort of divisive issue. Now, Musk's complaint is really around the bill and spending and all of that. But is there a deeper-seated narrative here that we're not really kind of understanding around this US debt issue?
It's just what it is, right? I mean, the last time the US government ran a budget surplus was in the year 2000.
Yeah. That's just 25 years ago.
Yeah, about a quarter century ago. Now, you know, the deficit to GDP ratio has averaged about negative 3.4% within that same period. However, I think alarm bells are starting to go off because of what I term an unsustainable fiscal path that I think that the US is probably on. That fiscal deficit to GDP right now is about negative 6.4%. We've also seen a significant increase in deficits for the US government. Now, there was a significant spike during COVID because there was all that COVID-induced borrowing. However, if you smooth that out and you look at, you know, the fiscal deficit growth between 2022 and last year, it's grown 33% to $1.8 trillion. If you even look at the interest elements, last year it was almost $900 billion. That's what they are paying to service that loan. Now, that's even more than what they are spending on defense. It's more than what they are spending on Medicaid. I mean, it just only makes sense that these alarm bells start to go off. In fact, it is even said that, you know, if interest rates go higher 100 basis points from where we are now, it's going to add another $300 billion yearly to the interest expense for the US. And the fact that, you know, interest rates have gone up quite significantly over the last couple of years hasn't really helped. I mean, if you look at the 10-year US Treasury between 2019 and date, it's gone up about 6 times. So the interest rate has ballooned.
Yes.
You are borrowing significantly more. As a matter of fact, the Congressional Budget Office is saying that this tax cut bill is going to add another $2.4 trillion to the deficit over the next 10 years. So that's something to be concerned about. I mean, you're in a situation where you're running very significant fiscal deficits, and then you want to cut taxes.
Cut taxes, not very fiscally prudent.
It doesn't make sense.
I mean, despite, you know, some of Musk's erratic nature, because there may be more to this, but I guess the principle behind why do you want to bankrupt America by cutting taxes in this kind of economy is a big one. We're almost running out of time, but I can't let you go without talking about China, right? I want us to talk about the relationship between Xi Jinping and Trump. Obviously, we know there are these sort of trade talks going on, and there's a 90-day truce over the tariffs. But what outcomes can we expect?
Highly uncertain. Okay. I'm not surprised by what's going on. As a matter of fact, when they announced the fact that they were going to have that meeting in Geneva, I have thought that we're going to have several bumps in the road. So the outcome of that meeting, the positive outcome, I would say, was quite surprising to me, right? Because it was a very positive outcome where they now reduced tariffs and whatnot. So what's happening now really isn't surprising. That, you know, it's kind of getting harder down the road. So you have a situation where the US is just trying to crack down on Chinese student visas, for instance. It's also trying to tighten the noose for China's access to advanced chips. And then on the same hand, you're trying to negotiate. So China is looking at that and saying, look, you're not coming to the table with enough respect, you know, so they're going to kind of play hardball. And with the temperament of the person that's in the White House, expect to see even more issues down the road. Now, they've announced yesterday there's going to be a meeting in London, right? They're going to continue these talks. Now, the outcome of the talks in London might be positive, but down the road, we're going to see a lot of bumps. Now, the first Trump administration, the trade deal they signed with China came towards the later end of that administration. It took quite a while for them to negotiate and get to a point. I think it's still going to take some time. The 90-day truce is good for markets, but on a broader scale, we're going to have a lot of bumps on the way to get into a deal with China.
Absolutely. Thank you so much. I think we'll be watching that sort of China-US debate very closely. Thanks so much for coming on the show. Efosa Aluyi, great to have you as always.